right, so we'll go ahead and get started. All right, and we have one more person joining us, so welcome. We are just getting started, so you haven't missed anything. I appreciate you joining us. If you want to, either unmute yourself or pop in the chat where you're from, where you're joining us from. I appreciate your time today. All right, and with that being said, we're going to go ahead and get started just to keep on time. So today we're going to talk about the key roles in a real estate syndication. And for those of you that I haven't met yet, I appreciate you either being here live or watching the recording. This is being recorded for those that couldn't attend live. My name is Angie, and I'm the owner and founder of Ohana Investment Partners. One of the reasons I started Ohana Investment Partners is because as I got into real estate investing, I fell into private lending and then started to get into passive investing. And I truly believe it is magical. Real estate investing is a great way to grow your generational wealth, but you absolutely do not have to take on another full-time job to be able to take advantage of it. So I started Ohana Investment Partners to help people passively invest in real estate. We do these webinars every 2 weeks, so it's typically every other Thursday. And these webinars are just short informational webinars in digestible format. They're typically 15 to sometimes 20 minutes. We'll go over a topic and have Q&A. If you're watching the recording, we typically will record the topic and then we stop the recording for Q&A so people feel comfortable asking whatever questions they have. So I encourage you to hop on live whenever you can. All right. So that being said, we'll get started. So today we're going to talk about key roles in a real estate syndication. And real estate syndications can really be boiled down to a really simple example, like an airplane ride. So if you think about the last flight you took, the last trip you took, there are a lot of players to make sure you get safely from point A to point B. There's pilots, passengers, mechanics, flight attendants, and everyone, people on the tarmac, right? People checking you in, people getting your luggage onto the plane. There's a slew of people that are helping with that entire experience, and they're all working together. If you think about a real estate syndication like that and just simplify, not knowing whether or not you have a lot of experience with real estate syndications or not, think of it like the pilots are the sponsors and the operators in the syndication, and the investors or the LPs are the passive investors and the passengers. Everyone's going to the same place. We all have the same goal to get there safely and to enjoy the ride, but everyone has different roles. Pilots are responsible for the flight, and the passengers are responsible for simply buying their tickets or making that investment, right, and enjoying the ride. There are some key players in a real estate syndication, and this is not everyone, so just understand that. But I just wanted to highlight today some of the key players and some of the main roles in a real estate syndication. So you have the real estate broker, and we're going to dive into this bit by bit. So you have the real estate broker, or the person that helped acquire the deal or find the deal. You have the lender. You have general partners or GPs. You have key principals or KPs. You have passive investors or LPs. You have a property manager as well as an asset manager. And then you also have someone like myself, so we will use Ohana Investment Partners for that example. So your broker is the person or the person that found the deal, right? So either the real estate broker or person in the acquisition seat is the person or team who surfaces the property for sale. And this can either be off of the listing or an off-market opportunity, which means it's not publicly listed. So commercial real estate is very different than residential because there are a lot of off-market listings. So you may use a broker, sometimes there are wholesalers, you may be direct to seller. There's a lot of different ways to find opportunities, could be from networking, but there are a lot of off-market deals and transactions that do take place in commercial real estate. So having a strong relationship with your broker or the person that can help you acquire the deal is really crucial, especially as you're going through the due diligence process and the acquisitions process. The person, which often we'll just use the broker for an example, the broker is the liaison between the operations team and the syndication team purchasing the deal and the seller. So there's a lot that goes on during the due diligence period, right? You're reviewing financials, you're walking the property, you may renegotiate the debt, right? Or with the lender. So often what we've seen in a couple recent transactions is the purchase price has actually been renegotiated with everything going on with interest rates rising. So the broker is helping you communicate this to the seller, the current owner of the property, to make sure the deal is advantageous for both of you. So they're really important to the team. The lender. The lender is the biggest money partner in a real estate syndication. They provide the loan for the property. The lender does their own due diligence. So if you think about the operators in a syndication or the GP team or the operations team, we do our own due diligence. We do our own underwriting. The lender does the same thing. So it's somewhat similar to retail in that, right, the lender's making sure the property makes sense, right, and the loan makes sense. It's a lot more comprehensive for commercial real estate. They're doing their due diligence, they're doing the underwriting, they're pouring through financials. There's a separate appraisal to make sure the property or asset is worth the value of the loan requested. There's a lot that goes into it. So if you think about the airplane analogy, neither the broker nor the lender are actually on the plane. They may be the people on the tarmac directing the plane. They may be the people checking you in or getting your bags on the plane. They're really important people, but they're not on board the plane. So in instance, for these roles in a syndication, don't typically share in any of the returns or the equity in the future, right? They're not part of the purchasing entity. Next up are the GPs, or the general partners. They work hand in hand with the broker and lender to secure the loan and acquire the property. The GPs, or general partners, are also managing the asset throughout the whole life of the project, which is why they're often called the lead syndicators as well. The GP team includes sponsors and operators, and sometimes these are the same people. The sponsors are the ones signing on the dotted line for the loan and are often involved in the acquisitions and underwriting process. The operators are typically responsible for managing the acquisition and executing the business plan by overseeing the day-to-day operations. Operators guide the property manager and the asset management of the asset. So your operators are your day-to-day operations people. Your sponsors are the ones signing on the loan. So could be the same people, could be different people. You also have your key principals. So if the operator or the sponsors don't have enough personal liquidity or liquidity to show the lender, and the lender's not happy with it, they're going to ask for someone else to come in. So you're going to have a key principal or a KP. This person's signing on the loan, and it's based on their personal liquidity, their net liquidity. It is based on basically their net worth. So the lender's looking at their net worth, and this just says, okay, well, we're bringing this person, and this person has enough that if they need to contribute some additional personal capital to keep the property afloat, if things go sideways, they're available, they're on the team. Often they want to see someone with that net worth. So they may say, okay, if you're taking out a loan for 10 million, then this person's net worth has to be equal to that loan, has to be 10 million. So they'll often look for that. And one or more key principals or KPs can be brought into the deal to help guarantee the loan if the sponsor's personal balance sheet isn't sufficient enough. So it may or may not be. Then you have passive investors, or we call them LPs, or limited partners. So these people have no active role in the project. They simply invest their money in exchange for a share of returns, or an interest rate, right, a preferred return, and then some equity. They're just like the passengers on the plane. So if this is something that you already do or you're looking to get into, you're the person on the plane. What you're doing, you're buying your ticket, right? You're paying money to secure your spot for the ride, and then you're sitting back and enjoying the ride. And it's amazing. If you have not already done it, I highly recommend. It truly is amazing. This is what a lot of people call mailbox money, because you write a check and then money comes in. A lot of times it's via wire, ACH transaction now, but it also can be through a mailbox or a check. And then you have the property manager. So once the property's been acquired, the property manager and the asset managers become arguably the most important partners in this project, because they're boots on the ground. Your property manager is your boots on the ground. And they're the team that executes the renovation projects, right? They're making sure rents are collected. They're making sure renovations are happening as expected. They're making sure that you're getting market rents. Instead of, a lot of times with mom and pop owners, you're getting below or sub market rents. So they're making sure you're renting the units at the highest possible rents. And then you also have the asset managers, right? And the asset managers are typically on the GP team or the operations team, and they're making sure the business plan is executed. And this is so important. So they're working hand in hand with the property managers to make sure they're delivering on what they said they would for both the operations team, right? The GPs and the LPs. Because remember, the LPs invested, but they're not dealing with the day-to-day operations. The property managers work closely with the operator, the asset manager, and they make sure that if there's any unexpected surprises, they're addressed immediately. If the renovations are behind schedule, if the economic vacancy, which means that the rents are late or not being collected, if that falls to a certain percent, they'll focus on that, right? That's a red flag. So they're managing that constantly. And then you have someone like Ohana Investment Partners. So in a real estate syndication, Ohana Investment Partners is typically, or someone like us, right, as part of the general partnership or the fund management team. So we're on that team. And our main role is to lead investor relations and help raise the equity needed both to close and for capital expenditures or CapEx after closing. So if you're not familiar with CapEx is, it is your renovations. It's the new HVAC or the roofs or the new playgrounds or whatever it is, right? Maybe it needs new plumbing. So our role is to lead investor relations and help raise that capital needed. At Ohana Investment Partners, we serve as an advocate for investors. So how do we do this? We make sure the sponsors' projections are conservative. So we also underwrite the deals and make sure it meets certain criteria. So if you think about it, when you're looking at an offering, you may potentially have 3 different people that have underwritten that deal, which means evaluated that deal, right, to make sure it is a good quality investment. You have the operators, you have the lender, and then you have someone like myself. And then the 4th person, of course, should be you if you're looking at a limited partner or an LP role. You want to make sure that you can do your own due diligence, that you can evaluate that opportunity to make sure it is a good opportunity or offering that meets your investing goals. And that's so important. We also make sure that deals are structured favorably towards investors. It's really important that in syndications, the deal and the offering is really favorable to the investors and the LPs. Because without the investors and the LPs, we're not going to be able to get where we're going. So go back to the airplane analogy, right? Airplanes aren't flying with nobody in them. If nobody's in them, they're going to cancel the flight. So it's important to have those LPs and those limited partners, those lenders, to have a very favorable structure in the deal, and they should. We want to make sure multiple exit strategies exist. We want to make sure the exit cap is higher than the cap rate at which the asset is purchased. Our goal overall is to make sure that your capital as a LP or a limited partner is preserved and will grow according to the business plan. So after the property is acquired and after closing, right, after we have the LPs in place and we have the GPs in place, so we have the whole team in place, we're acting as the liaison between the sponsor and the operations team and the investors. And some of the ways we do this is by quarterly or monthly updates, by financial reports, and any other important communications, by making sure we have all the W-9s, making sure you're getting your K-1s every year. Think of someone like Ohana Investment Partners as a flight attendant. We're going to make sure you're prepped throughout the ride, right? Remember, they get up in the middle of the plane and they're going over all the safety features. And then you get your pack of peanuts and your Coke on the flight. So we want to make sure you're prepared for the journey, you're well informed, and you're comfortable through the flight. Investing passively in real estate syndications, funds, or other commercial deals will often meet 3 requirements, which are really important to me personally, and may be important to your investment goals. And if you haven't already set investment goals, I highly recommend you do. But often real estate syndications meet the goals of being low effort, low risk, and having positive cash flow. So if you are interested in passively investing in real estate and you haven't, and you want to find out more about real estate syndications, you want to find out more about the offerings that we have, I encourage you to join the Ohana Investor Club. So this will allow you to get offerings and opportunities that we have, and you can either sign up as an interested investor at ohanainvestmentpartners.com/invest, or you can scan the QR code. And the goal is to provide you with offerings and opportunities so that you can decide what best meets your investing goals. There will never be any pressure or obligation in anything that we do. So if you want to join and you're just looking to get information and start understanding investment decks and PPMs and start reading them and get comfortable, that's 100% fine. If you want to say, hey, I want to join the investor club and I'm ready to invest tomorrow, that's 100% fine too. There's no obligation. I just encourage you, if you haven't already started passively investing in real estate, I highly encourage you to do so. And then if you're not quite ready to dive into the possible or potential of passively investing in real estate, you can sign up for our general email list, which you will get a newsletter twice a month, access to our bi-weekly webinars, and any other free resources or meetups that we have. So that being said, I'm going to stop the recording and we can go over any questions that you guys have.